The following segment is sponsored by Daniel A. White and Associates and does not necessarily reflect the views of this station or Forever Media Incorporated. Rick Jensen on 1150 AM, 1017 FM, WDEL.
Dan White's been a financial planner for, over 25 years, perhaps even more. We could grill him and find out. And I'm a client, too, and he always has great advice for you. Now, if you filed for extension of your taxes, I guess that there are some things that you can do and cannot do, especially regarding retirement and all. But still, over the last year, during the pandemic in 2020, so many of the rules changed, especially when it comes to retirement accounts like IRAs and any other SEP IRAs and such like that. Dan's been following this very, very closely, helping people out. He's on the phone right now. Hey, Dan.
Hey, Rick. How you doing?
I'm all right. I'm okay. So I was reading something you'd sent to me, and I was looking at this thinking, you know what? This looks like something that I wouldn't even want to touch, because if I don't talk with you or somebody else in the biz, like an accountant or something, this looks like someone could make a big mistake and lose money. And I'm just going to share the headline: Pro-Rata distribution rule for after-tax IRA contributions. You've told the story of people who put too much money in their IRAs, and then they have to take the money out, and then there can be penalties and such. What's this? Yeah.
Well, this is a little bit different. So, whether or not you can always put money into an IRA, as long as you have earned income, you can put money into an IRA. So the question becomes, if you're going into a traditional IRA, whether or not it is deductible. So the rules are it depends on your income. So, for example, I'm going to pull out my little chart here. And it all depends on whether or not you're in a company retirement plan. But if you're covered by a plan, your adjusted gross income has to be under $105,000. If both spouses are covered by a plan, it's got to be under $105,000 for you to take a deductible IRA contribution. If one of you is in a plan, it's got to be under $198,000. Now, doesn't mean you can't contribute. If you put $6,000 in an IRA and you're over those limits, you can put it in. It's just you're not going to be able to take the deduction. So this confuses people, because let's say, for argument's sake, somebody has $294,000 in an IRA, and they put in $6,000, but then they find out, I couldn't deduct that this year, so I'll leave it in there. It's after-tax money. Well, number one, you have to file a Form 8606 the year you made the contribution. So you have to tell the IRS that, hey, I didn't take a deduction for this, so now I have $6,000 of my $300 is already been taxed. So you want to make them aware of that.
Yeah.
The problem arises when you go to take the money out. So obviously, let's say somebody says, well, hey, I got $6,000 in there that's already been taxed. I'll just take that back out, and I won't owe any taxes. Doesn't work that way. Okay, so this is where the pro-rata rule comes into play. If you take the $6,000 out, the IRS is going to say, wait a minute, that represents 2% of your total IRA. Okay, so of the $6,000 that comes out, 2% of that will represent your cost basis, and 98% of that will represent taxable income. So you can't cherry pick the money you want to pull out of a plan. Same thing if that person said, hey, I have $6,000 in there. I want to convert that to a Roth.
Yeah.
So I can convert the whole $6,000 to a Roth, and I won't owe any taxes. The same pro-rata rule applies. They'll say, hey, 2% of that, $120
yeah.
is basis, and then you got to pay tax on the whatever it comes out to, $58.80. Is going to be Roth conversion and taxable. So
okay, so that's
the pro-rata rule, and it jams people up.
You always have a lot of great advice, and I appreciate your experience. Thanks so much. Sunday morning at 7, you host On the Money. Sunday morning at 7, you wake up, get a cup of coffee for everybody else is awake, sit down and listen to WDEL. What's on this Sunday?
Yeah, this Sunday's going to be an interesting topic. A lot of people want to give advice, and I kind of joke with people when it comes to Social Security that you get your Social Security advice from the coffee shop or the hairdresser or that kind of thing, Yeah. And it is true. That's where people, well, what did you do? Well, I took it at 62, that kind of thing.
Yeah.
And a lot of times, even in our office, we'll get people to say, well, I want my daughter or my son to look this over. And the whole thing about the show this week is, be careful who you take advice from because everyone's lens is different.
Everyone's lens.
You know, if you're 65 years old and you're looking at it through your eyes, and now you're gonna ask your 28-year-old what they think, they're gonna look at it a little bit differently than you would. So you got to be careful who you're taking advice from because not everybody's in your position.
Good point. Dan White and Associates, 888-690-8820. And it's On the Money, Sunday mornings at 7. Good talking to you, my friend. Be well.
You too, Rick.
All right,
Stay
take
well.
care, Dan. Yeah, go Phils.